Yeah, this is really weird. I'll have to take a picture, like, because I've got my Android phone on Facebook Live, because doing Facebook Live on a desktop just seems to be completely rubbish. And I've got a big old tripod holding up my phone. I've got another tripod holding the Clubhouse Apple thingy, and then I'm recording all of this on the computer. So, I hope this works. Right, that's 12 o'clock. Let's crack on. So today, so hello everyone. The subject for today is the first steps to creating a biz once you have a rough idea of what you're going to do. And I see all sorts of errors happening regarding this all of the time, and it's crazy how in a world where we have Google and YouTube and there's like abundant amounts of information, really good information, I mean lots of crap information obviously, but there's so much good information out there. I mean, you could go and pick the brains of any billionaire you want. You simply, like recently I've got rather, not obsessed, but really intrigued by Chamath Palihapitiya, I think that's how he says his surname, and his mind, the way he thinks is very much, it resonates with me and how I see the world and stuff. Same as Peter Thiel, Elon, all that sort of stuff. And like, you can just spend a whole bunch of hours, you know, binging their brain effectively on YouTube. And the crazy thing here is that in a world with all of this amazing information, people still screw up and do the most mind-blowingly, like, not stupid errors, but errors that you really don't need to make. And I mean, hell, who am I to talk? I did them myself. I've made pretty much every mistake you can make. But the thing that sort of frustrates me is that I've got like for those like around me, okay, I've got a whole bunch of friends and acquaintances and all that sort of stuff, and they know I've got the WAP and all the stuff on YouTube, and then they just don't consume it. And the reason I guess I'm making this video is because there's a and by the way, she's fully aware of this live stream. I said, look, I'm going to dedicate this whole live stream for you. She's not part of the WAP yet. I hope you are, because we go through all of this, and basically, again, I've got permission to share all of this. So I'm not backstabbing, or I'm not like that. I'm very straight talking. And so she basically made every mistake you could make, and it was just ridiculous amounts of like things that she could have just avoided. And I think it's going to help for others here. And so, without showing too many details, basically, she's been a bit of a wantrepreneur. So she got sort of caught up with some of the self-help sort of stuff. I think she got into Jay Shetty, and who's in fact, ignoring my thoughts on Jay Shetty, but all the inspirational stuff on YouTube, etc. And okay, I need to get into a business. And I think for the last 2 years, she's come up with lots of different ideas, some good, some not good. But then every single time, she's done the same set of things, which are not the right things to do. So like, she'll come up with an idea, and then the very first thing, set up a limited company. Wrong, you don't do that. And then gets all the station, all the bits and pieces, like what I call sharpening the pencil. So they'll get some stationery, some business cards, some fancy pens with names on it, or whatever. Basically, paying money for expensive website, blah blah blah. Everything which I guess some people think they need to do, and then. So fast forward, you got all the bits and bobs and the fancy bits, and you've incorporated the business, but have you got a business yet? No, you haven't. And so they've gone through all of this time and money, buying a laptop, like what? Going through all of this to set up a business, which isn't even a business yet. It's not even post proof of concept. It's pre-proof of concept. And so. Yeah, over the next sort of 25 minutes, I'm going to rattle through my methodology called iPACMAN, and it's what I do with every new business. And I've set up probably 15, 20, or I've set up / bought / invested in probably a good 25 businesses over the last 10 years. So I literally know with hindsight what works and what doesn't work. So this is all hindsight. So I've got my little sort of doodle thingy over here, and so I call it iPACMAN. And so if you have pen and paper or a phone, it's probably worth jotting this down. So the letters mean, so I is idea, P is planning, A is architecture, C is client attraction journey, M is metrics, A is assembling a kick-ass team, or kick-ass team, depending on your accent, and then N is next. So that's iPACMAN. But there's a lot in each section. So, I mean, I could talk for hours on just iPACMAN. And the proof of the pudding with iPACMAN is that we put our money where our mouth is. So, as you know, the WAP, the Wealth Action Plan, thewap.org, check it out, is all about business creation. And last year, so I think it's November 2019, so it wasn't last year, it was a bit more than that. My wife and I decided to go, right, we're going to use everything the WAP teaches and do it from scratch. I'm going to set up a business in a completely alien industry that I've never done before, and make it work. And so we set up myfairypenpal.com, and it's basically a subscription-based website or company where little girls between sort of 4 to 9 to 10 years old every 2 weeks get a fairy letter, some gifts, some exercises. It's like a nice little pack, and she makes and the fairy, basically the fairy is writing to her every 2 weeks, and it's really cool. And so the milestones that we set. So here's the first thing. I haven't even got into iPACMAN yet. First thing is, most people get into business and they're like, right, I'm going to make £1 million in the first year. Wrong, don't do that. You need realistic milestones, okay? So I know this is where the whole self-help world has really screwed over a lot of entrepreneurs, because, you know, you listen to Gary Vee or, you know, Grant Cardone, like 10x, mother, whatever, yeah. And it's like, okay, well, I'm going to make £1 million. No, I'm thinking too small. I'm going to make £10 million in year one. Because if thinking any smaller means you're not 10xing your life, and and this just leads to problems. It really does. So be realistic, especially if you've never been in business before. So with My Fairy Pen Pal, I'll just call it MFP. First goal was to create £300 a month profit within the first 3 months or 4 months, 3 or 4 months, and then by the end of year one have £3,000 a month profit. So there were the 2 years, and I didn't even plan for the rest. Okay, there's no point planning year 2, year 3, year 4. The amount of cash flow forecast spreadsheets I've seen from startups being, you know, that have actually come to fruition, it never does. So literally in year one, it's all a case of, right, you're opening up a lemonade stand in the middle of the Sahara Desert. You need to get going. There's no point planning year 10 when you don't even know if year one's going to work. So so that was it. £300 a month by the third month, and £3,000 a month within a year. And so that was the goal. So what we did is we went through iPACMAN, and if you do the 30-day free trial on the WAP, I've made videos along the way. So there's literally the MFP experiment, and you can see everything we did in order. You know, sourcing the materials, you know, getting the marketing out there, getting clients, and all that sort of stuff. And so it's there. And so fast forward, it's been what? So I can't do the month maths. My month maths is really bad. So November 2019 to now, what is that? December, January, February, March. I guess 16 months onwards. I don't know. So what we did in the first 3 months, we hit £450 a month profit. And then by the end of year one, we hit £4,500 a month profit. And this was during lockdown. We hired 2 full-time members of staff during, you know, lockdown and all of this. So it can be done. And I guess, I mean, is the idea all right? I guess it isn't a so-so idea, but with business, you can have a really bad idea. As long as your implementation is good, then it doesn't really matter too much. And so yeah, we've literally gone through this. So let's start with iPACMAN then. So the I in iPACMAN is idea. And so here's a couple of questions you need to ask yourself. So I'm just going to rattle these questions off. So what type of biz model and sector? Is it a big J-curve business, or is it an invention business? I'll go through these in a second. Is it an existing spend? Is it a residual revenue business? Is it something people want? Okay, so this is really crucial. So start with that first little question. What type of biz model? So is it a recurring revenue, like a subscription-based business? Is it a one-off customer type business? For example, if you're a wedding company, you're only getting one-off customers, right? Really? Yes, people can divorce, but realistically, you've got a one-off customer. So it's not the best type of model. I guess if you're running a wedding business, you're really hoping that the guests of the wedding are wowed by your amazingness, and then they book you for their wedding. But it's slow burn. It's tough. I've got lots of friends that run wedding businesses, and they will all attest that, God, the lag is horrendous. Let's say you do impress a guest and they book you for their wedding. Like, you could be waiting 2 years before that guest books you and pays you for stuff. So, yeah. Also, is it B2C or B2B? So is this business going to serve consumers or other businesses? Again, depending on what you do, you're going to set up that business very differently, and the way you, I guess, orchestrate yourself as a business is going to be completely different. And also, what sector is in. Again, that's a big topic in itself. Right, so let's move on. Time is very short today. Also, is it a big J-curve business or an invention business? So this is sort of my big red flag warning thing. So a J-curve, I don't know how this is going to look, because this is like a mirrored camera. So if screw it, I'm just going to do it So I need my little doodle pad. So a J-curve business is basically, let's say over here is the beginning, year one, okay, from day one. And a J-curve business is where you are ploughing money into this, like massive amounts of capex, so capital expenditure, and you're going underwater. So you're in the red, in the red, in the red, in the red, and then eventually you hope to make big profits, year 3, 5, or whatever. And so if you look at your, your profit and loss, it's like massively in the red and then up into profit. So it's like a J-curve business model. That's the plan. However, what happens with a lot of J-curve business models is that they go into the red, they start doing the J, and it keeps on going down. And they never get the vertical part of the J. They end up just bleeding forever, and it's just like a diagonal line down into the red. Game over. Restart level, basically. That's what you have to do. And so an example of a J-curve business would be a restaurant. Like, if you're going to set up a restaurant, you need the lease, you need to fit out the restaurant, like the kitchen, the front of house, the payment systems, you need to train the staff, you've got high stock, and that's all the stuff relevant for just being a restaurant, let alone all the other business expenses that you need to set up. So that's a big J-curve. And with restaurants, you're probably aiming to break even hopefully by the end of year one, but you're probably not realistically, especially these days, you're not going to be hitting profit for a long time. So that's the J-curve. And an invention business model is by far the worst business you could ever engage in. Never ever do it, please. Not never ever, just not anytime soon. So, for example, this is why Dragon's Den is screwed over the public, or Shark Tank in the US, because every pitch is basically an invention. Hey, I had this problem, so I invented this thing, and I want to get it out into market. That's pretty much Dragon's Den in a nutshell. But who gets funded in Dragon's Den? Yes, you get some inventions, but really it's those that have an existing business and revenue and cash flow. They're the ones that get funded more regularly. The thing with an invention thing is that most of the time, if someone's never run a business and that has an invention, okay, that's absolutely fine. But to get an invention out into market is incredibly expensive. One, you have to IP it, so you've got to trademark it, patent it, etc. That is expensive, and even if you patent something, if someone rips you off, you then need the time and money to enforce that patent. What if China just copies you? There's nothing you can do. Absolutely nothing. So there's pros and cons whether you patent stuff or not. It depends on what your product is, really. And then you need to get the prototype, a working prototype. So that's a lot of money in itself, depending on what your invention is. And then then manufacturing it. So prototyping is really easy. Bulk manufacturing is hard and it's expensive. And so what you'll end up doing is that you'll waste yours and all your friends and family's money. So even if you manage to raise 50 grand, that's not enough to set up and launch an invention type business. You really need a chunky upfront. You need at least 250k to get going, but that's not enough to really get going. You then, so that's, round A funding. Then you need Series B, C, etc. So I would just avoid it until you've done business lots of times and gone through the whole cycle. Set up, run, grow, sell a business. Do that a few times, then get into invention. I've got all sorts of invention business ideas I really want to do, and I've had them bouncing around my head for like 5 years, and I'm itching to do it, but I just know it's chunky. So until I can blow £250,000 of my own money into that, I'm not even going to bother. Is it an existing spend? That's the next question. Bear in mind, we're still on just the idea bit. Hey, Coco. Sorry, my cat always comes to say hello. Is it an existing spend? So, for example, let's take toothbrushes. Oh, no, toothpaste. Toothpaste is something we all buy, whether we like it or not. We need it. It's an existing spend. So you're not having to convince the customer or client that they need toothpaste. Like, they know they are. So then it's a case of redirecting an existing spend. So if you have your fancy toothpaste, your aloe vera gel toothpaste or whatever it may be, all you're doing is trying to get someone to redirect their spend away from Colgate or whatever over to you. So it's an easier proposition. Whereas if you've got like some weird, ultrasonic vibration type teeth cleaning device or whatever, that's not an existing spend. That's hey, this magic gizmo is going to make your teeth nice and white. You really need it. And so you're trying to create a new spend for the client. So that's, again, it's just another barrier that you're sort of getting in the way. And also, is it something people want? I've said this, I think, a few times in these daily wealth generation chats now. Don't bother trying to set up a business or a product that people need. People don't give a shit about what they need. We all need to lose weight, but are we doing stuff about that? No. Not weight. We all need to eat healthier and all that sort of stuff. But it's not the case. People buy what they want, not what they need. It's a massive misconception that has been, I don't know who started it, but yeah. So is your new business idea, is it something that people actually want? So really have a think about that. So yeah, that's just the idea bit. And so you'll sort of have a rough idea of all these things bounce around your head. But planning, this is, oh God, I don't know how I'm going to do this on a verbal live chat. Planning is where you need to do your strategic number planning, okay? So I've got a spreadsheet. In fact, all my strategic number planning has never really been a spreadsheet. People like spreadsheets, but I never bother. It's always on the back of a napkin in a restaurant. Pretty much every business I've ever invested in, bought, or set up from scratch myself has always started at the back of a restaurant napkin. And anyone that's gone to dinner with me, I've always got a pen on me, and I'm always doodling. And I guess the rough, again, the WAP goes through the iPACMAN in depth. The rough things I work out is total costs to set up. Okay, right, these are the costs. So what is the capex? So what are the bulky purchases that I need to do? So X, blah. What's the OPEX, so the operational expenditure? What are the monthly running outgoings of the business? Whatever it may be. And so let's say you come up with, I don't know, $3,000 a month in OPEX, and you got one member of staff and a whole bunch of business expenses, and let's say it's $3,000 a month outgoings. So that's your first sort of target. Okay, so then the next question you're asking yourself is, how many customers do I need to hit $3,000 a month? Or if it's a subscription-based business, how many monthly subscribers do I need in order to break even on my OPEX? So that's your first milestone, just breaking even, let alone profit. And then once you've figured out how many customers you need, then all of a sudden things become so much easier, especially if it's a recurring revenue business. So, for example, if you've got a product which is £10 a month, let's just say it's £10 gross profit per month, and your OPEX is $3,000 a month, or you simply just go 3,000 divided by 10, 300. Oh, okay, so you need 300 customers and you break even. Then the next question you're asking yourself is, how am I going to get £300? 300 customers. But actually there's another question, which is not how am I going to get 300 customers, it's how much is it going to cost me to get 300 customers? So CPA is a question which everyone needs to ask themselves. So CPA is cost per acquisition. So you literally have to buy your customers when you're first starting out. Yeah, you can go organic, but building up an organic pipeline takes time. And when you're in a startup phase, you don't have time. You really don't, because you're bleeding cash out of every orifice. So 300 customers. Now, a rough rule of thumb to start off with, just pessimistic rough rule of thumb is it's going to cost you at least double your price. So if you're selling something that costs £10, like a £10 one-off thing, like a £10 widget, it's going to cost you at least £20 in marketing, Facebook marketing, Google, AdWords, whatever, minimum, absolute minimum. If it's a residual income thing, so let's say you're doing £10 per month, so total spend of a client per year is say 120. Don't be surprised if you're going to be spending £200-300 to get one customer. So yeah. So then, not only do you have your capex and your opex, you also then need sort of a market, like a break-even capex. So it's like, right, in order to break even on my opex, I actually need this bulk sum of capital just to go and buy those, those first 300 customers. And it's a weird concept to get your head around. So planning. Let's move on from planning because there's not much I can do verbally here. Architect. Oh God. In fact, I should have looked through this. A lot of this is going to be hard to explain. Architecture. So this is how you're orchestrating your products in order to derive profits. So I'm going to keep it really basic. A lot of people don't like the term funnels. I mean, I know it sounds a bit clinical, but whether you call it a marketing bucket, client attraction journey, funnel, whatever. A lot of people I think are used to funnels. So it looks like this. So at the top you'll have some sort of lead magnet. So it could be a free thing, free PDF, free videos, free trial, whatever. So all you need to do is try and populate as many people into your free trial up here. And then you probably have a cheaper product. So it could be your £10 a month type thing. So your free trial is populating your lower thing, your £10 a month jobby. And then below that you then have, I guess, what I call a profit maximizer, where you have a chunky product. It could be a £5,000 product, £2,000 product, etc. So here's the thing, especially with the subscription-based business, you're not going to make any money on your lower thingy. So if we take the WAP, the World Action Plan, it's £30 a month or 300 quid a year. The WAP makes no money from that at all. And at the moment, the WAP doesn't even have the back-end jobby. So all I'm doing with the WAP is, because it's still early days, is simply populating as many people into the free trial as possible, which then hopefully have as many people in the £30 a month jobby. And then once we hit a critical mass, then I will launch the incubator, which will be a bit more expensive. So that's literally all you do, and all the profit is in the back end. So I've given these different names. So you have a product for prospect, a product for a lead, and product for client, and then a profit maximizer. So that's architecture again, and there's loads of videos in the web about that. Okay, so C in iPACMAN is client attraction journey. Right, again, we're going to have to really rush through this because I want to get into some questions. So what is your AMP? Your AMP is your audience message pond. So you have to know who your audience is, what message is really going to resonate with that audience, like a dog whistle type message, and then you need to fill up that pond. And that pond is typically your free trial. Do the new biz planner, use results to build, your client-facing online infrastructure. So a good rule of thumb, or good practice really, is just get a big piece of paper, an A3 or A2 piece of paper ideally, and you simply draw a big horizontal line across it. And day 0 to, I don't know, year 1, okay? Sorry, you can't see my arms. So like this. So you're drawing that big old line, and you need to map out every single interaction that a new prospect or user or client will have with you. So it could be day 1, Facebook advert is what they'll see. Day 2, let's say they've become a lead. Okay, they're going to get this email, this text message, this prod, this thing. Someone's going to call them on on day 7 say, hey, how's it going? So you literally need to map out every single interaction of the perfect user journey, okay? And then once you've worked it all out, and you'll realize, okay, you need an email here this day, a text message this day, you need to send them a pack on this, like, then you go out and build it. That's when you need a CRM, a customer relationship management tool, and you can automate all of that. And that is so important. You then have your back-end infrastructure. CRM, I use Zapier. Zapier is a pretty cool bit of internet magic wizardry where it basically can connect any software. So, basic dashboards, for example. I've got a basic dashboard. So I use Outlook for my email software. And what happens is every single time we have a new lead or a new customer, obviously people pay through Stripe or PayPal. It then goes through to my CRM, which I use Drip at the moment, or one of the CRMs, so Drip. And then what happens is Drip then sort of sends me an email going, hey, you've got a new subscriber, blah, blah, blah. And then I've created folders in my Outlook, trial. So basically, I can just simply glance at my Outlook on my left-hand screen over here and go, oh, I've got a new sale today, or a new lead, or whatever. And then you can then easily work out your conversion rates, because for example, there's one thing here where I've got new trialer and then new customer, okay? And so a good stat you need to keep an eye on is, what is your conversion rate from trial to paid customer? And then all I need to do is simply divide the numbers. So and that's important, because that is one of your leading indicators. If your conversion rate starts dropping, you know that future sales is going to be harder, you're going to be spending more money on marketing, and profitability is going to wane. So yeah, you need to know that conversion rate. What else is there? Lead generation, again, there's a whole topic on that. I mean, there's all sorts of things you can do with lead generation. Conversion rate optimization. So this is the thing, people, so it's like that Bananarama thing. It's not what you do, it's how you do it. So people may follow a list like iPACMAN and go, right, I'm going to do every single thing here. But then they do every single thing really poorly. So it could be like, one of the things could be create a landing page to promote your product. Okay, and then people go to Wix.com and create the world's worst landing page. And the copywriting on it will be dreadful. It will be literally a massive wall of text, because guess what, business owners, we're close to the thing, it's our little baby, so we simply just vomit over the page of how much love we have and how amazing it is. But I mean, there's a whole topic on conversion rate optimization and simple landing page configuration. So yeah, you can go through all the motions and do everything. Oh, I've done the website, I've done this. But if you don't do it properly, you're not going to get the results. And I experienced this in the early days. I'd set up adverts to a landing page, I'd got everything ready, and I realised, wait a minute, I've spent $5,000 on ads and I haven't had a single customer. What's going on? And well, no shit. I've either driven people to a shit website, or the website could be great, but I haven't, fully optimized all the little bits. And you need to go really into the details. So for example, your headline, the sole objective of the headline of a landing page is to get people to read the subheadline. The sole objective of the subheadline is to get people to read the first paragraph. The sole objective of the first paragraph is to get people to read the second paragraph, and so on and so on. And the whole page needs to be orchestrated in that sort of order. And at the same time, you need a thing called dual readership pathways. So a dual readership pathway is basically, you have two people that land on web pages. You have someone that will read every single word on the web page in the right order. And then you have another type of person, which is pretty much everyone, that will skim read a page. They'll look at and it'll probably be headline, video or picture, call to action, scroll, 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 and they'll probably only read the bold writing. So you still need to, even on your web page, you then need to somehow create that you give the message you want to give based just on the bold writing, because people will literally just read the bold and not read normal words. And so can you still convey that message if people are skim reading? So yeah, so conversion rate, CRO, conversion rate optimization is everything. And when I buy a business, that's pretty much all I do. It sounds really like, yeah, I can go into an average business and make it, or better than average, simply by doing CRO, and that's all I do. and then sales. So that's just the C of iPACMAN, and there's a load. It's like, if you look at my piece of paper, I've got iPACMAN, the actual letters, those little sub-headlines, and then like a million sort of sub-threads in each one of them. So yeah, can't go through all that. Metrics in iPACMAN is, know all your stats, know your conversion rates in your client attraction journey, know your basic P&L, your business maths, all that sort of stuff. I mean, even little hacks like bank account management. I guess I sort of put that in the metrics thing. A lot of people run their whole business out of one bank account, which is, you're asking for trouble if you do that. So basically they have one business bank account and all sales go into that account and all outgoings go out that account, and it's like, oh, so what happened? And I did this myself. The reason I chuckle is because I got myself into a real spot of bother once. It's because I had one bank account and there was money coming in, and I think, oh, I've got lots of money, and then I'm spend in marketing or whatever, and then realised I wasn't, the VAT bill comes along and goes, and then all of a sudden, game over. So the spot of bother I got into, because I was operating a bullion business, so high revenue, and one day my accountant said, oh yeah, you got, next week you've got to pay your VAT bill, it's £44,000 or something like that, 40 or 44 grand. I went, I looked at my bank account and there was like 20 grand in the account, and I was like, shit, I've got 5 days to find 20 something grand. So top tip, at the very minimum, have 2 accounts. I mean, I've got 4 accounts for every business, so I have a operating account, a wages account, a tax account, and a profit account. So there's a good book called Profit First by Mike Michalowicz, I think. Good book, read it. Can get a bit fiddly with 4 accounts, because although I've got 4 accounts for every business, my discipline has waned a little bit with some of the accounts, and I just operate a 2 account. Sorry, I'm sort of swearing at you guys. A 2 account thing. So I have an operating account where all money goes in, all money goes out, but twice a month. So on the 15th and the 30th of every month, I add up all the income of the account. So I know, let's say it's 100 grand, and then I'll simply just put 20% of that into the tax account. Now, what will happen, and that's just for VAT. Now, you're never going to be paying a full 20% because you've got VAT reclaims and there's expenses you can deduct. So what will actually happen is if you're strict with yourself and just take 20% of all revenue that enters your account and plop it into a tax account, that tax account will actually grow over time. So that's that. A in iPACMAN is assembling a kick-ass team. That's a massive topic, but in a nutshell, this is the thing that you need to do when you're recruiting. You need to nail all of these things in order: job spec, job ad, recruiting and headhunting, filtering, interviewing, hiring, onboarding and legal bollocks, training, testing, goal setting, monitoring, quarterly reviewing, partying, getting drunk, career progression, all of that in that order. And you need to do it properly. Whereas before, I would put out a job ad, expect amazing people to apply. You literally probably end up having like 3 interviews, and you pick the best of a bad bunch, or best of those 3. You end up with a substandard employee, who's then even worse because you have very woeful and very substandard training and onboarding and whatever. You probably do a week of training, then expect them to know everything and get on with it. And then before you know it, you've got high staff churn because your hiring is shit, your training is shit, your monitoring and your progression is shit. Like, everything is pants. I honestly struggled for about 5 years with staff. I really did, until I was like, right, the military is probably the best honed organisation on the planet. For as long as humans have been around, there's been some sort of militia or military. And I was like, right, I was in the Air Force. What did the Air Force do? Oh, okay, that makes sense. And so I literally just copied and stole everything the Air Force did for their recruitment and training. So that's what we do here. And guess what? It works. That's A in iPACMAN. N in the last letter is next. And then I guess it's like, okay, is this a lifestyle boutique business? Is this a business you're going to scale? Is it a business you're going to exit? Are you going to IPO it, or list it on the stock market? Are you going to tokenize it? Is it a portfolio type business? Or is it, I mean, there's so many questions like in the next bit. And I guess it's interesting. So this is the last bit of teaching, then I'm going to open up for questions. I've got 3 groups. So in all my businesses, I've got 3 major groups, okay? And I guess this is important. So those in Clubhouse, you can't see me holding up my fingers. So group 1 is what I call my lifestyle group. So lifestyle group are businesses that simply fund your lifestyle and fund whatever your dividends and your take home or whatever. So they are, I guess, what would be your sort of average cash cow type businesses where, yeah. So whatever they may be. The second group I have are my scale businesses. So these are the businesses I'm really growing. So I'm posting 0 profits every year. So with a business you're aiming to scale aggressively or to sell, you don't really want to make any profits, because declaring profits is actually wasted capital. Because if you declare 100 grand profit, you're then going to be paying 19 grand in corporation tax, etc. And that 19 grand is wasted funds, wasted money. Or in fact, if you even having profit, 100 grand profit, that means that's 100 grand in your business that you haven't allocated properly for growth. So in my lifestyle businesses, I will declare profits because I'm taking divvies. In my scale, my aggressive growing or business I'm trying to sell, you really don't want to make any profits any year. So what happens is at the end of 3 months before the end of the year, I have a little bing bong on my calendar. Go, right, how much dispersed profits. So let's say it gets to 3 months before the year end, and a company's got 100 grand of declared profits, or £1 million of, it doesn't matter, 100 grand of profits. I'll then go, oh shit, I need to disperse 100 grand of profits in 3 months. So I'll then go, and there's all sorts of things you can do. You can go and buy another business, you can buy a property, what I tend to do, I'll just plonk 100 grand in marketing, because then that will go down as an expense. Year end comes along, you've got 0 profits, sweet, 0 tax. What have you just done? You've just simply deployed boomerang money out there. Marketing. So the 100 grand you put into marketing, it's going to come back in the form of new customers. So I call it boomerang money. But that way you've saved 19 grand in corporation tax, or depending on, with the new tax changes, it's going up to 25% corporation tax, depending on the size of your business. So hell, 25 grand. So that's the scale group. And then I have a capability group or an ability group. So these are businesses I'm not going to be selling. I just know that, I genuinely feel I'm going to live a long time, especially with CRISPR, tech, the fact that we're most likely going to be able to upload our mind to the cloud at some point in our lifetime, which means you'll then effectively become digitally immortal. Insurance is going to be completely changed when that happens. It's like you get hit by a car, okay, just re-download your mind and consciousness into another vessel. That's a whole nother topic. Anyway, so I'm going to live a long time, and for as long as I'm alive, I'm going to be doing business and investing and trading. And so I want a capability group. So in that group, I'm slowly growing. I've got some of these elements, but I want, this is just a personal want, I want a marketing company, a law firm, a PR company, a tech company, a building, construction, facilities management company. Did I say law firm? Oh, accounting firm is another one. Dan Stretton, Altered Carbon Style. Yes, I freaking love that series, and that's where we are going. I know it seems far-fetched, but what we're doing in Altered Carbon, or what is in Altered Carbon, that box set, is I think very accurate, especially if you look at Ray Kurzweil and his predictions. I mean, when we get that tech space travel, you will literally be anyway, moving on. So anyway, going back to my sort of capability group, basically I want a business in every sort of niche or sector, from publishing to PR to marketing to accounting to legal, whatever. So what this means is that when I then buy a new business, I simply parachute my whole ability group in, and I can then pimp out a company like that. So my little hack, my little trick that I do when I buy businesses is I simply I parachute in my marketing team in, and then pimp it out. That's pretty much all I do. And I focus on the CRO element. But yeah, they're my 3 groups: my lifestyle group, my scaling group, my ability group. And so when you look at the next part, the N of your iPACMAN, you then you sort of got to figure out, what is this business? So I've just seen Aaron log mentioned. He said, "What an awesome series!" Yeah, I agree. So Aaron, for example, he's got a tattoo studio in Norwich, and he's planning on growing it nationally. But the question Aaron needs to ask himself is this a lifestyle business, or is this a business to scale? Because I've had businesses where I thought, oh, it was a lifestyle business, and then it's gone really well, and it's a great cash cow business. Then I'm thinking, do I scale it? Maybe. Okay. Then you start scaling it, and then all of a sudden you turn that really lovely lifestyle boutique business into a horrible monster that bleeds and just eats cash. And then you're like, oh, no, disregard, backtrack. And then you like go, right, I'm going to turn this back into a lifestyle business. This is an ugly business to scale. No. And so, yeah, Aaron, don't be scared, like when you start scaling your business, to going back to a lovely boutique lifestyle business. Because setting up a business that chucks out 20 grand a month profit is easy. Like when you get the hang of it, and literally you just got to do, fail, learn, pivot, and eventually you'll get the hang of this. And operating businesses in that lower end of the spectrum is, piece of piss, eventually. But operating businesses sort of £1 million EBITDA upwards, it's ugly. It's ugly, and you have all sorts of different ceilings that you can't break through, and it's hard, and the infrastructure just goes nuts. Honestly, you will have a much easier time having a really shit hot team of 3, maybe 4 people plus yourself. Let's call it 5, team of 5. You'll have, you'll have the best fun in business where you have a team of 4 or 5 people, and that includes yourself, where your time isn't being soaked up and absorbed by 1,000,001 different time vampires. And it's just chucking out a nice 10, 20 grand a month profit. That is that's bliss. It's when you start trying to scale into a big old monster, that's yeah. So it's horrible. And there's actually been a few times. See, this is where different personalities come into it. So I've actually tried to scale a few lifestyle boutique businesses into and they always turn into ugly, horrible monsters, and I end up scaling down. And so this, admittedly, it just could be my personality. I'm not an admin type person. I can't be asked with any bullshit, bollocks, politics, all that sort of stuff. And so, it's my thing. I think the lifestyle boutiques. And so, what I choose to do is operate a whole bunch of different lifestyle boutiques. And before you know it, your whole group is an ugly, horrible, bigger company, if that makes sense. Especially if you've rolled them all up or they're within a holding company. That holding company becomes, that thing that you're always aiming for. So, yeah, I've been waffling on for 42 minutes now, 43 minutes. So, again, supposed to be half an hour, but I want to open up for questions now because I have been rattling on. All of this is in depth in the WAP, by the way. Thanks for your comment, Aaron. Much appreciated. So I'm just going to, those on Clubhouse, if you have any questions, please pop your hand up. I'll give you the mic. And whilst we're going to see if anyone's going to ask a question, I'm going to scroll through here on the Facebook feed and see if there are any questions. Some old names here. Alice Bamber. Hey, Alice. It's been literally years. I don't know if you're still watching, but lovely blast from the past, as in your name. Long time. Any questions? Haven't been many questions, actually. Right. Okay, Aaron said, agreed. If I end up having to spend my time managing folks, it might ruin the love for tattooing. Yeah. Business will always ruin your passion, by the way. But that's another thing. A lot of people say, set up a business that is aligned with your passion. Wrong. Honestly, every time I've set up a business that is part of my passion, I've ended up ruining my passion. I love flying. What do? I set up an aviation business. I quickly hated flying. I love flying. So it goes in cycles. I then stopped doing that, and then I love flying again. I love gold and silver, so I set up a bullion dealing business, and then quickly hated gold and silver because all the rubbish business brings with it. I love trading, so I set up a trading business, and then very quickly started hating trading, and then I had to go and turn the business back into a way that I did like, trading, and then bubble football. I saw that on YouTube. I wanted to play it, but there was nowhere in the UK, so I set up the UK's first bubble football company. quickly hated bubble football. I love floating, as in floating in a sensory deprivation pod on Epsom salt water. So I set up a float company. I haven't floated in well over a year, even though it's literally a 7-minute drive that direction. Don't follow your passion. It's better setting up a business in a really boring sector or industry that you really don't give a shit about, and just focus on getting profit, and then having an income so you can just do your passion and just pay for your passion. That's a much better way. And then when you are rolling in cash, then go and do your pet project. Then you have enough money to actually set up the business properly, so it's not required. You are not required in the business. Honestly, there's a massive disconnect. There's a gap between, I guess, the haves and the have-nots, but in the business sense, because when you see new people setting up business for the first time, never been in business, and then it's like a endless train crash of events. Basically me in my first 4 years of business. But then you have people like angel investors and some of my mates and who anything they touch is they have the Midas touch. Any new business they set up, boom, it'll be like £1 million profit in day one. Like my mentor John Davey is like the sharpest business mind I've ever met. Honestly, I've the best respect for him of anyone I've met in business. He's the sharp, like John Davey. Just Google. In fact, you won't even find him with Google. But he can touch anything and he'll make profit. But the thing is, one of the things that people like John do differently than someone starting off from scratch is that he will start up a brand new business with 5 or 10 staff day one, and he'll set up this brand new business with a director, a manager, a general manager, an ops manager, the whole team there, and all he'll do is sit doing the puppetry at top with very little effort or input, because he would have got the team together. That is the first task. He would brief them on the mission, the directive, the vision, etc., and then let the team get on with it. And that's how you set up businesses properly. But you can't get there until it's a rite of passage. You need to burn some businesses before you get there. Let's see. Any other questions? Will, hey Siam, I remember you saying you bought a marketing company previously. Could you explain a bit about how you found a suitable company and how it worked out? Does the company just work for your own projects, or do they have other customers? Okay, cool, good question. So I covered this in the M&A, one of the M&A sessions we did. But long story short, what I tend to do with when I look for businesses is twofold. So fortunately now I have a stream of people saying, hey, do you want to invest in this business? And I have people approaching me all of the time. And so, but another way where I sort of go headhunting is I will literally buy a list of companies within a certain profitability, certain amount of staff, basically businesses within my criteria, and then I will send a letter to all of them. So I'll probably buy a list of 1,000 businesses in the area that I'm looking for within my criteria, and I'll send a heartfelt, straight, candid letter saying, hey, this is me, I've got a pot of money, I'm looking to buy a company of this size, this criteria. I found you because I bought a list of 1,000 companies, and I've sent this identical letter to all 1,000 businesses, and I am hoping, for a law of averages, that there'll be one company here that will like me and I like them, and then we get in bed. I don't actually say in bed, but we'll do business, blah blah blah. And so what I'd like to do is set up. I'm holding a dinner, a business investment dinner, and I'll do say 3 dates. So I'll go this date, this date, this date, and basically it will be me plus whoever So this dinner is only for business owners of this, who I've written to. What we'll do is we'll have a intro over starters. I'll do a presentation over main course. Then I'll do Q&A over dessert. And then if we like each other, then we can have a further one-to-one dinner later, and then take things forward. And then all you're doing is running these dinners. And then hopefully after 1, 2 or 3 dinners, you would have got probably a list out of 1,000 people. You'd probably be, talking to 5 or 10 businesses, and then out of that probably get one business that'll do really well, that you get into bed with. So that's typically how I find it. So with the marketing company, I actually just did it for the list. I wanted revenue, so I did exactly this with marketing companies. I then bought. Actually, I ended up buying a business that I didn't actually really want. So the business was going bust because the owner was like 70 odd years old. He was just winding it down, and I was like, whoa, you can't just wind it down. You've got like 10 years of client data there. And so I bought his business. It wasn't out of administration. It was basically as he was winding it down. So I effectively just bought his list, and I then reactivated that list. So what happened is that he had already told all of his customers, hey, I'm retiring, thanks for your services, goodbye. And so I bought this list, and I made a video with him saying, hey, this dude, Siam, has just bought my company, and I know I've said goodbye, but this is what he does. Feel free to engage with him. And then I emailed, and then I tried to reactivate that list. So that's basically it. But typically these days, it's because of 2020, I've downscaled everything. So really, my marketing company, that business is no more, so to speak. So the marketing company we have right now is pretty much dormant. It's me that does all the big picture sort of Facebook marketing stuff and planning, strategic stuff. We have Matt, who's our in-house web dev, who's a wizard, gadgetry wizard type thing. We have Lewis, who's our systems architect, so he can set up CRM, Zap, and all that sort of stuff. And where I said you map out your client attraction journey, he can actually code all of the CRM to do all of that. And then we have Joe, who's our young digi marketer. So really, there's about 4 of us in the company now, and it's pretty much dormant. So, however, the marketing company so Panoptic Partners is what it's called. That simply just caters for all my businesses now, really. So, the WAP, RT, My Fairy Pen Pal, the Lighthouse Group, Zenon, Float Holdings. I'm missing 2 businesses. 4 businesses. What have I missed? Zenon, the WAP. Yeah, there's 9 in the group. I've forgotten a couple. Oh, Make It Happen. Haven't done much on that one. Damn it, I need my list. So yes, that's that. But yeah, we do service other customers, etc. So any other questions? Oh, so we had a quick Aaron on Clubhouse. You have the mic, sir. Sorry, you put your hand up ages ago.
How you doing?
Hey mate.
Right.
How can we help?
Yeah, cool. So mine's just a very quick one. I know we're running over the time as normal. What I wanted to know, if you got, say, an idea for an app, like based on, say, like a dating, similar to how Tinder started the swiping thing.
Yeah.
If you wanted to test something like that, where would you, or how would you work out what the kind of costs would be involved in?
Yeah, this.
Whether,
I know exactly where you're coming from.
I'm assuming it'd be quite inexpensive.
Yeah, so I get the app sort of business idea thing all of the time, and I know where you're coming from. So the app sort of business falls into the invention category, and it's an utter ball ache. So if you look at the app Headspace or Calm or any of the let's take Headspace. So it's a really simple app by the looks of it. Okay, you look at it, you press a button, and there's like a monk speaking, and then it's like a simple line, and it's cool. It's a really great looking app. What a lot of people don't know is how freaking expensive apps are. So that the last time I checked, and this was a few years ago, that Headspace app cost at least 300k, and they're full-time devs now working on that. And then with an app you need the Android version, and then you need the Apple version, and so you've got to maintain, basically you may have one app, but you may actually maintaining 2 different apps. You then need to constantly be on top of it with the devs and all the iOS and Android updates. And it's expensive. Yeah, you can go. Yeah, there's loads of companies that say, "Hey, we'll build you a mobile phone app for $5,000 or whatever," but it's going to be pants. And I've done that. I've bought God knows how many different apps for my companies, and they've just been a pile of poo. And so it's actually better. What I've done is done web applications instead. So like the WAP originally was meant to be like a Headspace style app, and people learn wealth generation through the WAP app. But instead, I've gone down a different route, and it's a better route actually, because you actually need to prove the business model first. So you simply create an online portal, so like a web app, and then try and run your business via that, and see if you can actually get it going via the web app. And if something which is, responsive. So you can open it up on a desktop, to a mobile phone, iPhone, whatever. And if you can get the UI good on that, that's pretty much all you need to begin with. And if you still want an app, then you need to go out and raise funding and go and raise like 250, 500k, and then get a proper app going, and then use most of the money for marketing. So hopefully that makes sense. But if you're starting off with like a dating type app, oh man, it's going to be tough. It's going to be really tough. And especially dating, because it's a two-pronged business. You've got to attract boys and girls, and then it's hard because no one is going to advertise on your site or go on it if there's no one there. And so you like to get all the boys and girls on your dating site, like there's a lot of marketing involved, because no one's going to get it if there's like 100 people on the app. And this is where app companies have actually sort of been cheeky, and what they've done is that they've pre-populated their app with like 10,000 bot accounts just to appear as though it's a busy hotspot, when in fact there's probably like 50 humans chatting to bots. So yeah, that's my quick answer. I would not bother. I would try and set up a business based on the web sort of portal first and see if you can actually get it working. Too many times I've seen people waste 250 grand on an app, and they realise the business model is shit and the business doesn't work. They then go bust and everyone loses their money. Okay, so hopefully that makes sense. I've got to move on to the questions. Johnny Peters, have you had many crypto business ideas or areas you see emerging in this space? There's loads. Pretty much every business you can think of that exists right now, you can put a crypto element into it to get rid of the middleman. That's basically a quick sort of nutshell. How to create a crypto business. Basically, apply crypto to any business that gets rid of middlemen. That is an easy way to think about it. Donal, came across your print t-shirt on demand idea, like the WAP. Like the fact that it can be done all online with no stock. Yep, I'm thinking of trying to pounce on whatever's currently trending. What pitfalls do you see with it? I.e. funny Bitcoin shirts. Yeah, so for example, Facebook served me an advert a couple of weeks ago, and it was the Wall Street Bets guy with HODL on it. And I was like, easy buy, like 30 quid, done. Still haven't got it. So, I mean, those businesses are really simple to set up. You can just get a Shopify account, connect it to, your publisher, your print t-shirt thingy. They then send it directly from the factory to the client. So you'll basically have to get a designer to design your print t-shirt stuff to, and then get in on the trend. So yeah, Bitcoin stuff. And like, hell, you could really niche it. I mean, there's like, let's take Doge. There's a strong loyal fan base in the Doge community. So you can make your whole company on Doge-based merchandise. And then just do Facebook. And then Facebook adverts into all the Doge groups out there. Simple. So stick to one niche, and then you can, so you could be a Doge-based company first, and then you could filter out into other crypto-based companies, niches. Pitfalls is you just need marketing money. Everyone always sets up businesses with zero marketing spend and realize, why is my business not working? Because you're not buying customers. You have to buy customers to begin with. Even now, like 10 years down the road, all I'm doing is buying customers. And when I say buying customers, as in Facebook ads, marketing, etc. What other questions are there? Yeah, that's it. Right. This has been an hour session, double the amount of time I was hoping to spend.